Thank you. Hello, Mark. Welcome back.
Hey there, Dale. How are you?
Pretty good, man. So I'm really curious to see what you're thinking in here. It's been a long time since we talked, so I'm just going to let you fly.
No, thank you, sir. Hope everybody's well. Thanks for great to be here this morning. Nice Friday morning, and things are starting to get a little bit interesting, aren't they? And not only in equities but also in FX and really all across risk assets in general. So I thought I'd pick up, and thank you, by the way, Blake, for your comments. If you're still here, it's very kind.
You're welcome. Nice to have you here, Mark.
The dollar, certainly, one of the more important developments, I think, in the last week is the move up to really the new highs for the year in the DXY. I've been doing technical analysis for probably 30 years, and some patterns are just bread and butter type patterns for how you look at things. And when you see, what the DXY has done just since the spring and carving out a nice little base and then moving up above that, typically those are pretty actionable type patterns and tend to be very high probability. And so, I do think that we're going to follow through to the upside in the DXY in the near term. But I also think that it's probably just a corrective pattern, that it does get up to 95 or potentially a little bit over 96 before we start to turn lower.
What would make you think that it's more than that?
Just looking at the wave structure, I think, of the move, but I'm looking at the pullback into the early part of this year as being very much a nice 5-wave decline, and so.
Okay.
No, I don't know. I have to just go with what my analysis shows, and for right now, there's no need to try to go against this breakout. If anything, you want to really press longs and stay short, things, euro or pound sterling and this and that. But I think
Blake talks about, Mark, how everyone their trade of the year coming into 2021 was unanimity on bearish a dollar. So, by the time we get to 96, and now that's, only about 4 months left in the year, that should take some of the bearishness out of the sentiment of the dollar and maybe set it up there, right?
I 100% agree. Sure.
Yeah. Okay.
So, if we rally up over the next couple months or potentially into year end, that would certainly set up for a very good chance to, I think, get long commodities, get long EM into next year potentially. But right now we're going to see exactly the opposite in the near term. I think we'll see a lot of deterioration in, not necessarily China. We've already seen, a lot of weakness there, but my thinking is we'll continue to see weakness in, EM. When you look at that, that's really starting to roll over and implode, and that's just a very bearish near-term pattern. I think we probably get down to 47, 48 in there near term, but that, we're getting towards probably the final stage of this little sell-off in the near term. But let's just
So you probably wait for the Dixie at 96 to look at foreign markets. But this is what I'm really curious about here, and what you're thinking here with the S&Ps.
Well, I think that it was important to see the little bit of a bounce we saw yesterday. It really happened right at a key 50% retracement of this move up from July. And also, if you look at the wave structure of how this unfolded, my thinking is that, is exactly 1.618 of this first move down where we bottomed out. So that's important. But the sort of the takeaway here is that right now it's only been a 3-wave decline. And so just, for those that study Elliott, I do think we probably have a little bit of a rally in store potentially today or Monday, and then we probably turn back lower. We probably mimic this little decline from Monday in price and time into next week or even into early September. But that's also interesting because if it's a ABC type correction, then that means we still have a likelihood of going back to new all-time high territory. So,
right.
There's a lot of moving parts. And what I've been telling people is the market has really been dominated by so many of these FANG issues that people have forgotten that you have literally, 5 sectors that have literally
carried the whole market.
Yeah, I mean, a lot of them, a lot of the groups so peaked out between the months of March and June. And so, things like the value line and many of these, I mean, this is 1,700 stocks equal weighted. I mean, this is our market. So the market peaked out in June 8th. It's not at all-time highs. Certainly if you include Microsoft and Apple, which are 12% of the S&P, then, of course, yes, markets are much more resilient. But other things like the transports, I mean, they've clearly fallen out of favor as of mid-May. Those have broken longer term uptrends from last year. And, that's sort of interesting that, you look at the leading groups like transports, semis, the SOX is really at the same level it was back in February. And so when the S&P recently declined, in August 16th, that was an exact 180-day ratio from the February peaks in technology. And so you have seen a little bit of a slide in tech, and some of that's been the stocks, but arguably, the FANG stocks are still holding up pretty well when you look at Microsoft, Google, Facebook, Apple, and those are so much of many of the indices and ETFs. So you really have to take that into consideration. And yes, the market is quite distorted. It's very much a mirage as to what's happening. Small caps have really been imploding of late, and that's really.
I was going to ask, how many people I've asked this whole sideways pattern? So I ask you, Mark, is this consolidation or distribution?
Well, I think we're going to see distribution. I think we are going to break 208. And so that's sort of the way I look at things. And let me pull up another chart just so I can show you a couple of things I'm looking at. I'm going to, I guess I should pause the share or stop the share. Let's see, resume share, stop
new share,
and then new share. So here's Optima, and here's really the FANG index that I've created. And this is just all of the larger cap growth stocks within technology and discretionary. And I've added Microsoft to that just to give people a feel. So this is really the FANG. But look at what's happened. We really held prior highs, and now we started to turn down. And this is in relative terms to the S&P below. After a stellar uptrend, this really has been going sideways over the last year, but recently has been showing more weakness, specifically from February, and then we had a decent rally up from May, and now that's starting to turn down again. But when you look at small caps, look at what's happened just in the last 2 days. So the IWM compared to the S&P has broken trends going back since last spring. So that's a real big negative. I mean, you had a lot of people that were banking on small caps being able to hold and then maybe reassert themselves and move back to new highs. So I just don't know. This makes me a lot more negative on these smaller names. And many people just got caught up with how quickly, many of these single digit stocks went up multiples from last November into March. And then on the sell off, they said, okay, it's going to be time to favor small caps again. And I just don't know. So I'm a little bit more negative. I think you have to stick with large cap. And really what's interesting is that you look at what's happening with growth. Saw a big breakout in growth back in June, and even in the last couple of days, you've seen energy just start to implode, and growth has started to pick up again. So I think in the next 1 or 2 weeks, you see growth accelerate. Means you probably see the large cap, technology stocks hold up better than the rest for now. But then I think we are going to enter a time when when crude probably stabilizes a little bit, and I think that's,
and yields, it's all about yields for the growth stocks, isn't it?
Yeah, I think that's probably right. So yields, over the next week, I think that we're going to see yields likely dip a bit more. And so tech probably does okay, and then that's going to reverse. And I think we'll see the 10-year start a more meaningful advance that gets us back up towards 175, 180. But, I'm not in the camp that growth is going to, reaccelerate in the U.S. I'm just not a real big buyer of the U.S. economy just booming in the years ahead. I think that we are going to hit a slowdown. And so that would dovetail into my thinking that the dollar, bounces, but then yet we stall and roll over. And I think, even the yield move up is going to prove temporary, and that it's going to be range bound, I think, for the next year. I think it's tough to see. So anyway, the chart you're looking at here is just EEM versus developed markets. Sorry, sometimes I'm talking and I don't realize I should be sharing charts of what I'm speaking about.
That's okay.
Yeah, this is as the dollar has moved up, this is the ratio of EM, and it really peaked in February along with many of the growth names initially, technology, and that's just hitting new lows now for the last couple of years. So this is still a pretty tough spot in terms of
Mark, I remember a prior interview was probably, I don't know, May, June, and I think we at that time, and look, if you don't learn how to change your mind, you won't have any change left. You thought there'd be some type of trading turn to the downside, and there was. And you also said, and in October, I'm going to buy VIX calls.
Yeah.
So August, it looks, especially with the action we had in the VIX this week, maybe we've already bottomed in VIX, and we've been putting in higher lows in VIX forever now. And I'm wondering if you think we're coming out of here. Okay.
Temporarily. Yeah, I'm not sure that I can put too much faith yet in having a big move. Everything I want to avoid and tell other people to avoid getting too grandiose and making projections about large declines, and we really haven't seen any weakness, and that's the key. So yes, I do think that we probably see a little bit of a pop in the VIX. We're at 22 or so. The prior peaks are right up in the high 30s, low 40s. Yes, I do think that we probably revisit this area into the fall equinox into mid-September. I think that's sort of the period, but I just don't know if we're going to get the larger move. I want to see all indices sort of move down under July lows at a minimum, and yes, I do think that we're going to pull back to probably 4,300 in the short run, but let's see us take out 4,222. That would really open my eyes to the probability of a much larger correction across the board, and you just don't see that right now. You see everybody clamoring people have become really defensive in the last week. I mean, the sentiment polls have actually inverted. You see now more bears than bulls, which is crazy, with markets literally right near all-time high territory. So that's one thing to keep in mind. I think there's two factors that make me a little less real negative over the next few months. And I never thought I'd hear myself saying that heading into the fall, because I myself had thought this would be really the period that we have a real big correction. I'm thinking that likely gets postponed probably into year end, probably mid-November or late December, when a real peak happens that rolls over, that aligns with the 7-year Shemitah cycle and the presidential cycle. And I need to see proof at this point. So yes, I'm willing to play a decline in the indices for a little bit, and let's see what happens. Let's see if it really starts to show some volatility. But there's no need to swing for the fences when markets really haven't shown that much weakness. And if we do start to really get down near 4,300 or 4,250, then you're going to see fear like you haven't seen in a while heading into next month. And so I'm inclined to probably buy into that initially and see if markets still are going to push higher yet again.
Okay.
Anyway, let's talk. You want to talk gold? Because that's really interesting. Sure. What's happening with the dollar. So, everybody's looking at seasonally, this is a great time for the metals and this and that. And we just haven't seen it. I mean, gold peaked out last year right around this time. And, we just saw a brief little pullback, brief rally, and now the decline, I think, has sort of reasserted itself. So I'm expecting one final flush in gold, and that should be a chance to really buy into it. Silver has taken a lead on the downside. That's far weaker. Yeah. And I think you see a move down towards last fall's lows, 22 area. I'd be much more inclined to get long silver, and but just not when the dollar. If the dollar is continuing to move higher, it just makes it tough. And interest rates also. So I think that yields should start to turn up. And, I'll show you what I'm looking at here, and I just think momentum is starting to improve a little bit, and some of the stuff I'm looking at wave wise makes me think that any pullback in the next week, that we are going to form a bottom and that we're going to turn up, and probably this looks to be a decent wave one move up off the lows. So I think you'll see anything down near 115 to 120 or so in the 10-year would be a chance to really short treasuries, and think we're finally going to start a little bit of a rally in yields, treasury decline. So owning metals during that time should prove really difficult. I think if the dollar's moving up and yields are moving up, real rates are going to really, at least for the near term, they're going to prove to be detrimental to the precious metals progress.
Okay. And energy, that, was a darling for a while, and it broke down. Crude broke down.
Yeah, I think that crude is actually closer to a time when I don't mind being, trying to fight the trend a little bit, only because I see this as being sort of again,
ABC,
looking back
ABC.
at Elliott, I mean, it's not a 5-wave decline. So it's really still part of the larger pattern where I think we're probably going to get back to highs and get back to 80. So I'm looking at this right now. The waves are equal between the move in July and the move here, right? It's 62.5. Now we're getting below that. Downside, I think, should be capped around 58 maximum, maybe even 60. The next week is going to show some evidence, I think, of some stabilization. But for right now, sure, classical technical analysis would tell you, that's certainly very weak when you break a multi-month uptrend like that. And so it looks like you have a little bit more to go on the downside.
Okay. Crypto?
Yeah, I'm long a little bit of like things like Bitcoin, but I don't know how far I can trust it. I think that momentum is starting to roll over a little bit on this consolidation, and I just don't know. I think that you can still make the case for sort of an ABC type move. I'm looking for Bitcoin right around 50,000, and really using a stop of right near 43.9. And if it gets below that, then I'm just gonna pull everything and think I revisit it. I got out of most of my crypto between January and March of this year, but 75% of it was right near, right near the middle part of February. And I did that only because we saw, things like RSI got up, in the high 90s, and we'd only seen that twice in all of Bitcoin's history. When you see monthly RSI get so overbought, and historically you've seen almost 90% drawdowns from peak to trough. So,
we still haven't had a 5. This could still be a 4, is what you're saying, or we had a 5. Well, I see the waves.
Yeah, it's sort of, I don't know what to make of I thought this was going to be a 5 here, and we'd start up, and I don't know, but I think right now this is sort of a corrective move. I'm just not certain. My big thinking is that, if some of the other cycles I looked at, the cycle composite, it was actually negative for 2021, and I put that out a few months ago, and people were aghast, and then all of a sudden Bitcoin started to turn down. I'm not sure whether it's going to be regulation or what, but for now, I'm trying to stay very tactical and very short term in how I approach this, and just simply be long until there's proof that this doesn't work. But momentum is certainly improving on this move up, but I'm still of the opinion that we probably peak out and then probably turn down again as maybe you see a larger sell-off in equities. I don't know that Bitcoin could avoid that money would just flock to Bitcoin and it would be a safe haven. I certainly don't see that. So
we have an attendee asking if you could take a look at, I know you talked bonds and yields, TLT, please.
Yeah. Yeah, so I think we likely are going to test the highs that we've seen at 153. I mean, I see this as just being sort of a 3-wave move. So we probably test that, or maybe even get above slightly, and then we probably start to give way. But the trend at this point still seems to be, I don't take this as sort of a broken trend, only because it's a 3-wave move. So I still think you're probably going to push and hit new highs. So that means it's right to be long for the time being.
Okay.
And then we'll see. And then when we reverse, certainly if we take out, 148.50 or definitely under 145, then I can make the case to start to play for a move back down to lows. But I think we have one final flush in yields, and that happens over the next couple of weeks. And that means this goes higher.
Okay. Thank you so much, Mark. So why don't you show everyone the best place they could follow you? And I know that you're contributing on Traders Summit, but you know, if they want more of you, then what you're
let's see if I can
placing.
Let's see. So here's, can you see this in large screen? Let's see if that, I don't know if
got it.
Anyway, this is how you, let me try to reshare it again. This doesn't look like it worked.
It was up there.
I'll give you 2 seconds.
There. Oh, it popped up and disappeared.
So here's my contact info. Here's my website. The email, I'm happy to send you copies of any notes. I put out 2 every weekday and 1 on the weekends. I do weekly webinars every Thursday at 1 o'clock. I did one yesterday. And yes, I am on Twitter and StockTwits, and I do daily videos every weekday. So you can find those at YouTube. Those are all put there by my intern, and we try to make sure it's easy for people. So,
okay. Well, it was great to hear your views, Mark. I'm so glad that you know, we were able to work it out. And
yeah, thanks, Dale. I sorry about the.
That's okay. And you know, now you know the time, and I'll get a hold of you on Twitter to schedule you later in the year. And really appreciate your views, Mark. You're not only Blake's favorite. I think you're one of the best out there.
Thank you, sir. No, I appreciate it, Dale. And thanks to everybody for tuning in today. And we will see you soon. So happy rest of the summer. And
happy Labor Day when the adults get back from the Hamptons, right? So
yeah, my kids are going off to school, so I'm going to be an empty nester for the first time ever. So it's sort of an exciting time.
All right.
Scary, but anyway.
Enjoy the solitude.
Yeah, right. Exactly.
All right.
Take care.
Thank you, my trading warrior brother, Mark Newton, everyone. You could follow him on Twitter at Mark Newton CMT. And that's a wrap for the week. I hope that we've helped you and added value to what you're trying to accomplish as a trader here. And if we have, the best way to show your appreciation is to become part of our trading community. And the weekends are the best time to do it because it gives you a chance to navigate around and get comfortable. And, you know, everyone thought August, not much was going to happen. So, you know, everyone's on vacation, but, you know, Blake killed it this week. All right, a few winners. I hope you guys did too, but we laid all on the court because we're rooting for you. Our mission is to build up and edify traders every day. We do it with the team and the guests that we bring in. And I hope everyone has a great weekend. Remember, don't just count your pips, count your blessings. And I really do believe if you give it a try and for 90 days and hang out in the chat room and have access to everyone's research and patterns, that you'll be happy. Well, you know what, Richard, you're saying woo 25 pips for the whole week. Let me tell you something. I bet that there are many people that wish they were just even. So don't poo-poo a winning week. That's from Coach. And with that being said, I'll see everyone on Monday. Have a great weekend. Adios. Oh, you could join the team for Morning Edge in 16 minutes as well to wrap the week. Okay, see you guys. Cheers.